Hey traders, welcome back to Trade Empire. In this video, you will learn some advanced smart money concepts. As smart money is a trading system that follows the forces with the ability to push the market in one direction. First of all, in this video, you will learn the concepts of demand and supply, market structure, and liquidity according to smart money concepts. Next, we will cover an advanced trading plan, including 3 of the best smart money trading strategies. So let's start our video after a short intro. Starting from supply and demand, as supply or demand are the zones or areas where price rapidly pushes away and creates break of structures, change of characters, and left inefficiency behind. Here are 3 main factors to consider while identifying supply and demand zones. Did it create inefficiency behind? Did it break through the structure or create any change of character? Did it create liquidity before reaching to the zone? Let's learn what is inefficiency. Inefficiency occurs when we have gaps between the candles, also known as fair value gap, and when this scenario happens, there's a lot of chance that price will come back to this area and fill the gaps. What is break of structure? A break of structure occurs in a continuation trend, and every time price breaks a structure level in the same trend direction, it indicates that market will continue its trend. What is change of character? Change of character is a signal of trend change. As when price breaks any structure level in the opposite trend direction, we call that scenario a change of character. What is liquidity? When large financial institutes or banks wants to buy a large amount of any currency pair or any crypto coin, then they will require sellers in the market, and the existing conditions to place these position is called liquidity. Now look at this example, as we are in an uptrend. And if banks or institutes wants to buy this asset, they will need many sellers. But the market overall trend is bullish and everyone will try to buy here. And somehow if price makes this type of support or double bottom, and then break the neckline to the upside, many traders will set their pending buy orders on this support level, and then banks will take advantage of this. They will hunt their stop losses and buy the asset at low price. Here are some important points about liquidity. As liquidity zones are further confirmations to execute a perfect trade when formed above or below a trading zone. There are many types of liquidity in the market, but we mainly focus on equal lows and equal highs, as they are most effective. The liquidity is mainly defined by stop losses. As where the stop losses of traders exists, the liquidity also exists. What is order block? Order blocks are the optimized demand and supply zones. And the last candle of an impulsive move that left inefficiency behind is considered as order block. The candle color does not matter. But we have some rules to identify a valid order block. First, it must left inefficiency behind. Second, it must lead to a break of structure or change of character. Third, it must be unmitigated, because order blocks are only one-time use. When should we use the wicks as our order block? First, when the wick of a candle is bigger than the body of that candle, then we highlight only the wick as our order block. Second, when the wick of the following candle grabs all the orders, then we also use the wick as order block. Supply or demand, let's learn how to identify who is in control. Now imagine that this is a 4-hour structure, and price reaches to the demand zone. So, we will try to look for buy opportunities here. But what if the price came from an unmitigated daily time frame supply zone? So if you want to trade the controlling side of the market, mean demand or supply. Now let's suppose that you are waiting for a demanding trade to go long, but as the price came from an unmitigated supply zone. In that case, we will consider that the supply is in control, because higher time frame is always in priority. And you can't trade the lower time frame demand without any solid confirmation here. And you should always check that from where the price came. And here are two scenarios where you can take a risky entry. First, if the price breaks through the highlighted supply level, giving us a bullish higher time frame indication. Second, the price did not tap into the unmitigated supply level area yet. Now let me show you an example to explain that how to identify which side is in control. Now look at this example. This is a 4-hour structure. And we can clearly see that the market is in a downtrend, so supply is in control here. Even though we have a short-term uptrend here. But as long as we stay below the 4-hour supply zone, we have overall a downtrend. But if price breaks through the 4-hour major supply zone, then we can say that the demand took the control. And as long as price stay above the demand zones, we are in an uptrend. But if somehow the price breaks the demand zone to the downside, then we can say that the uptrend is over. And once again the market is in a downtrend, and supply took the control. Now as you have learned the concepts of smart money trading. So our next topic will be about the trading plan using smart money concepts. Smart money trading plan consists of two main steps. First, analyze the market structure and higher time frame to find market direction, that who is in control, supply or demand. Optimal supply and demand zones or order blocks. Second, observe lower time frame to execute trades based on 3 types of entry patterns, including supply or demand flips, change of character, and continuation. Let's start from first step, analyze the market structure and higher time frame. In this step, we will only look for the market direction and optimal supply and demand zones or order blocks. Now look at this for our gold chart. Here we can clearly see this break of structure to the downside that left inefficiency behind. So we have this order block here. And we can say that the supply is in control. And we will try to find short opportunities when price again taps into our highlighted order block. But as price breaks our supply zone and order block to the upside, we can now say that the demand took the control and market is in an uptrend now. And again we have an efficiency with a bullish break of structure. So we highlighted a new order block. And we expect that this zone will give us a perfect buying opportunity. So this was just an example to explain how we analyze the chart in higher time frame, to identify market direction, and to find optimal supply and demand zones. Now let's move to our entry patterns. The first pattern is the supply and demand flip. And in this pattern, price tests the last demand zone after creating a new higher high, and then pushes away from that zone, but failed to create a new higher high due to the lack of buyers in the market. And instead of creating a new higher high, price breaks through the demand zone with an impulsive move and left the supply zone behind. And then price retested that supply zone, where we set our pending sell order. Now let's move to a real chart example. In this example, we can see that price was in an uptrend and creating bullish break of structures. And we also have this unmitigated demand zone or order block. But price did not respect our demand zone and failed to create a new higher high, and we have 2 reasons for this. First, lack of buyers in market. Second, traders see this price range as expensive, so they decided to sell instead of buying. And price breaks through the demand zone with heavy momentum, leaving inefficiency behind, and also a perfect order block. So this is how we will trade this pattern. We set our pending sell order a couple of pips below the order block, stop loss above the order block, and we target the higher time frame nearest demand zone. But here's an important point. This pattern is slightly more effective when price pushes away from supply or demand zone with heavy momentum and aggressively, and left inefficiency behind. Now let's move to our next pattern, which is the change of character pattern. This pattern forms after mitigating a higher time frame supply or demand zone. It means we only trade on this pattern if we have the market in our direction in the higher time frame. And in this example, we can clearly see that our higher time frame market direction is bearish. And after mitigating the higher time frame supply zone, if our short-term trend in 15-minute changes the character, and left inefficiency behind, and left a perfect order block or supply zone, then we will set our pending sell order at that order block. And we expect that price will bounce back to our order block and trigger our order. Now let me show you a real chart example. Here in the 15-minute euro-dollar chart, we can see that overall we have a downtrend, and price just mitigated the higher time frame supply zone. And when price reaches at this supply zone, we move into 15 minutes to look for any sign of market shift, like change of character. So here we can clearly see that price makes a change of character, indicating us that price will continue its downtrend. And it also left inefficiency behind, so we have a perfect order block here. And we set our pending sell order a couple of pips below this order block. Stop loss will be above the order block, and for take profit, we target the next key level of higher time frame. Now let's move to our next pattern, which we call the trend continuation pattern. And we trade this pattern when the market is in a clear one trend. And whenever market makes a valid order block, it gives us an opportunity to place a trade, but only if we have the higher and lower time frame direction on our side. But remember one thing, market will give you a lot of entries while in a continuation trend. But not all your trades ends in profit, so you have to manage your risk while trading this pattern. Now let me show you some real chart examples. Here on the euro-dollar 15-minute chart, we can see that market is in a clear uptrend, and price is continuously creating break of structures to the upside. And we have this valid order block. So we set our pending buy order a couple of pips above this order block, and we have a winning trade. And here we have another valid order block, but we have a losing trade, as price took the liquidity below this order block, and then move upward. And here we have another valid order block, and we have a winning trade with great reward. So if we manage our risk properly, we can trade this pattern, and ends up being profitable, as the key to success in this trading pattern is patience and risk management. But to avoid losing trades, let me show you our multi-time frame analysis to trade this pattern. Starting from for our time frame, we can see that price break through the structure with inefficiency and left this valid order block. So when the price tap into our highlighted order block zone, we will then move into 1 hour time frame. And here we can see that after tapping into the order block zone, we have a long wick rejection candle. It indicates the buyer's interest in this price range. And we also have these equal lows here, where we know that a lot of liquidity is resting. And price already grabs the liquidity before reaching the order block. And this is another indication that market will continue its uptrend. So now, we will move into 5 minutes time frame to execute our trade. Here in 5 minutes time frame, we just have to confirm and execute. Here we can see that after this break of structure, market failed to create a new lower low. But it created this change of character to the upside with inefficiency. So, we will mark this candle as our order block as it created inefficiency while changing the character. And we will set our pending buy order, just a couple of pips above the order block. Stop loss will be below the order block. And for take profit, we will target the next key level, or just 1:2 risk and reward ratio for quick profits. So guys, that's all for today. And if this video has provided you some knowledge, please leave a like and subscribe the channel for more helpful trading strategies. See you in next video, and good luck for your trading journey.